Well, welcome back to Krown's Crypto Cave. It is a nice and early Sunday morning over here in Helsinki, Finland, and as always, not getting enough sleep because the sun does not set here, but do want to be wishing you well on this beautiful holiday. Yes, to all the people celebrating Bunny Day, Egg Day, Easter. Yes, Easter. Happy Easter to you all. Happy 420 to all the people celebrating yesterday, and happy, I believe it is Passover for the Jewish people out there as well. So hey, if it's just a regular Sunday for you, well, hey, happy Sunday as well. As always, want to be wishing you well, want to be wishing you the best, and because it is a Sunday, we're going to be going over some long-term analysis. And actually, today is going to be a very special day because if there is new information in this market, I'm going to be presenting the fundamental side of why the bottom could be in. Of course, this is also going to be tempered by some technicals. So with that said, let's have a little bit of a teleportation into the live scene right here, right now, and let's see what we got, baby. There we are. Oh, that's my derivative. Oh, I guess while we are here, for full disclosure, I am still in my long. Although we're going to talk about right now. This is probably a little bit too premature, but I am uncovered and I am exposed long, this same long from 39.30. Let's go back into the actual chart and actually talk about some fucking technical analysis because Bitcoin did do something yesterday night that it has not done in the past. Jesus Christ, man. How long ago was this? Since September of last year. And that is we closed above the blue 377 exponential moving average right over here. As you can see, Bitcoin taking a little bit of a leg up and closing a few bucks above, but it does count. Although here's the thing, it was done on a weekend. It was done on Saturday, perhaps the worst day to do any real move on. As typically when I see a move on a Saturday, I discount. So yes, I did take an actual a little bit of a scalp long yesterday. Ended up being just that, a scalp long. Hours of work for $20 for $20 worth of price action. Of course. There's also been some misunderstandings with that. People say, hey, how could you just trade for $10 or $20? No, I mean in price action, not contract size. Completely different thing. Anyways, with that said, while we are here on the daily, there certainly are many things to be aware of. We do have daily Stokes, as we spoke about yesterday, hinting at a cross back up to the upside, defending the bullish control zone. And this is exactly what I want to see if bulls are going to take control and take this next leg up to that 56, 57, 5800 target. Sorry, and I do apologize for my slurred speech. Again, not a little bit of a lack of sleep last night. So when it does come down to it, I'm just going to colloquially refer to that area as 5,700, give or take a few bucks, and that's kind of where I have my eyes on if and when this does get the next leg, as it does look quite likely, as Bitcoin is pretty damn constructive and very resilient in the lower time frames. And just as an aside, this is a great time to just kind of go over just very basic stuff. As going over here to the 12-hour, you can see each and every dip is just being bought. All of these wicks to the downside, these are bull wicks as they are bought up extremely fast. And that is typically indicative that this is a very constructive formation, which would imply bullishness on top of it. Of course, it's in the formation of an ascending triangle, which typically speaking is more bullish than not bullish, right? Statistically speaking, it is more likely to break out to the upside. Now, I've seen every pattern break out every fucking which way possible, but hey, if there are one things that I do like when it comes to patterns, it is triangles. Not really, I'm kind of a wedge racist, don't really give a fuck about them, but triangles, okay, I actually do like triangles. So with that said, going into lower time frames and kind of following this triangle that we have been looking at and for the last, 3 weeks now, we are still within the confines of it. We did close above the upper resistance of it yesterday, as we spoke about on video, and it does seem to be still being reaccumulated right over here. But because it is still early in the weekend, I am very hesitant to be having like the actual directional position looking for the breakout, and we did not get what I was looking for yesterday as an actual reaction. What I want to see is massive volume being spiked up, something similar to what we did right over here. It doesn't need to be exactly the same, but something similar. As you can see, we've just been kind of dying down, which suggests that this is still not necessarily just ready. And keep in mind that the apex on this triangle is coming in at beginning of May. So realistically, we could spend some more time in here, and it could be, it certainly could be, It could be in the cards that we do come back down and test the lower supports before the actual move itself. So keep that in mind. I don't believe that, I do believe that it was premature yesterday. That was bad on me. I know I should know better on a weekend, but hey, it turns into a $20 price action scalp. Fair enough, on a Saturday as this turned into a rejection real fucking fast, right? Although very low time frames, it's not a death sentence or anything like that. When I'm talking about these lower time frames, understand that these can change around multiple times throughout the day. I mean, that's just the nature of them. There's there's 24 1-hour dildos in one daily time frame, right? So a lot can happen within that, and that's why it changes so often. Higher time frames is where I like to really focus on because those are a lot more set. As you can see, as far as the daily goes, nothing's really changed for the past 3 weeks or so, as Bitcoin just ranging between the blue 377 exponential and this yellow 21 exponential moving average, which is going to be rounding out our bottom support, as that is now officially above 5,000. So I really like that for good confluences between these, and you're going to see these squeeze each other. And as this formation becomes more and more mature, I want to see whichever one is more aggressive, is more aggressively sloped, is the one that's likely to win out. As you can see, the 21 exponential moving average right over here is significantly more aggressively sloped, and guess what? It's going to be lining up with our bottom support of it's going to likely be lining up with our bottom support of this whole formation. If you are looking at this as an ascending triangle to begin with, as this rising trend line will be coming in right around 51. So actually, it's a little bit lower, but you can see that it will be coming up with each and every passing day. It's rising very rapidly at $30. So if we were to spend another few days in here, it's going to be coming in at 5,100 in no time. That's my point. And when it comes down to it, like I said, the apex on this triangle, beginning of May. So I typically do want to see these things get about 75% full. Though that is when they become extremely likely to break. Before that, it does happen every once in a while, but we're talking about statistics right now. That's what trading's all about. And that would imply that we'd probably be breaking out somewhere around this region right over here, the 23rd, 24th of April. So, perhaps even the 22nd as well. So basically, after CME's open tonight, I would be a little bit more gung-ho, maybe a little bit more cavalier with searching for a breakout for right now, as it is a holiday. And I mean, a lot of people are going to be taking off tomorrow as well. And here's the thing, when I was trading traditional markets during this holiday of Easter, and usually when you do get a 3-day holiday, a lot of the people would leave the floor on for the actual holiday itself on Friday, and then they'd actually take Monday off as well, as there's some weird rule with traditional markets where you can't have more than 3 days off in a row. So people would take it off themselves, and it becomes like kind of an unspoken holiday where very little happens. So it wouldn't surprise me if tomorrow we come in and we're still kind of stuck in this range, and then maybe the 23rd, 24th, right over here when we start to get very mature, is when this thing becomes extremely more likely to explode. While we're on here on the lower time frames, we do have 3-hour Stokes crossing to the very weak, technically crossing to the upside right now, but very weak either which way. It wouldn't take much to drive this in one in one convictive direction. More importantly, we are above all major movement averages on just about every time frame. Every time frame, I believe, above, even above an hourly. So yes, I mean, maybe if we go down to a 30-minute, we're going to be below some on a 30-minute. But overall, my point is that it's very difficult to be bearish on something that is literally set up like this. This is the definition of constructive overall. The dips are being bought relatively quick, and we spend a lot of time grinding resistances, which it's just like on lows. Lows don't give you a significant amount of time to sell them. Highs don't give you a significant amount of time to sell them. And you can see right over here, you've been given a significant amount of time to be a seller if you want to. Now, with that said, on the lower time frames, does that not mean that you can't have? I know that a lot of people trade the lower time frames out there, and that's completely fine. Just understand my perspective is I don't focus on it all that much, although I will incorporate it. And it does look to me like we could very easily pop back down and test a little bit lower. We do have some bearish divergence going on just about every time frame up to maybe a 4-hour. Yeah, we do have it on the 4. Yeah, we do have it on the 4-hour. What about a 6-hour, huh? Yeah, a little bit on the 6-hour actually. A little bit on the 6-hour. So that is getting a little bit more menacing. What about the 8-hour? None on the 8-hour. So yeah, all the way up to a 6-hour. But overall, my point is that we can have another down move, sweep a little bit lower, and still remain in this overall bull. Still keep intact this bullish formation, which is kind of what I'm leaning towards, as that is what the higher time frames are suggesting right now. So again, with that said, I do want to spend a little bit more time here. We do see hourly Stokes getting way up there. So yes, that would be kind of suggesting. These have actually been really good during this consolidation. But remember, when we're talking about hourly Stokes, like we're talking about a move that could, $50 at most for the most part. But it is actually getting these just about perfectly. Called a short right here, called a short right here, called a short right here, called a short right here. Again, these are not like these are not like game-winning trades or anything like that, but they, they're good enough. And getting the lows even better. Right over here, right over here, getting some nice momentum. Getting it right over here, and yes, I do have a little bit of special settings on these. If you want them right now, I mean, these are completely public. These are not. This is not what's it called. The jewel, so it's like, it's all good. Like, go ahead and use it. Anyways, oh, by the way, shit, I forgot to mention, hey, if you're in the technical analysis program and actually the options program, I just uploaded a new video on that. It's a very, 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 very special indicator, which I'm actually going to be showing a little bit today, but it's going to really help get you through these sorts of times where things are moving slow, and you kind of want to resist that urge to FOMO into what might appear to be a breakout move. This is going to be the indicator that actually saves you from that. So check that out. It's going to be the newest one at the very end of the program. Anyways, so while we are here, let's see. Yeah, hourly is going to be losing the RSI. Again, this is very low time frame bullshit. So, if we pop back down, test maybe even 52.75, 52.50, still all good. I mean, it wouldn't even put things out too much if we came all the way down to 52. Keep in mind that Bitcoin really has to do a lot of damage here to destroy this. My first interpretation is as an ascending triangle, which would be bullish. So yes, and now we get on over to the 4 hour. What do we have on the 4 hour? 4 hour Stokes gonna be looking like they want to cross the downside as well. Usually when I see this, I want to see another test of the 21. We do have some bearish divergence, so yes, I'd want to see a test of the 21. I do see a little bit more significant area down around here, however. So, remember that there's a lot of hours between now and when CME's open later tonight at 7 p.m. Eastern Standard Time. Now, keep in mind, CME's had a very strong close on Thursday, which was their last trading day. They closed above the 200 simple moving average, and this really looks like an ascending triangle. Not only that, but we did take out the exponential on the RSI right over here. All at the same time. So when it comes down to it, as I make sure that my other screen is nice and safe and SAFU, did I get what I wanted done? Let's see, maybe I can do some of this. Maybe I can try this. There we go. Alrighty. Yeah. So, to me, CME's, it's going to be very, 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 very insightful to see where spot is trading in relation to CME's when they open later tonight. If spot is trading above where CME's closed, which CME's closed at 53.25. If spot's trading below, I'll be looking to be a seller. If spot's trading above, I'll be looking to be a buyer on the gap fill. So again, keep that in mind as it's a little bit of patience here and you probably have a nice trade. Daily Stokes looking like they are technically down right now, but looking weak. And overall, we do have a nice formation going on. As you can see, even if the Stokes came all the way down to tap the low side of this range, I would be looking for a bounce here. It's not until we actually break this trend line, this rising trend line, where I'd say, hey, we're likely to have a further, a deeper retracement. And also keep in mind that the weekly closed. How did the weekly close? Yeah, weekly closed okay. Weekly closed okay. In fact, the weekly would look like would look good for some continuation as well. Next target again right around that. On this one actually right around 59. So fair enough. CMEs are trading at a little bit of a premium right now. So when I do make that relation with spot, understand that that's actually a little bit crude way of doing it. Really, what I want to see is where CMEs open. Do they open down or up? If they open up, I'm looking to be a buyer. If they open down, I'm looking to be a seller. After a little bit of a little bit of a counter move. So yeah, okay, back on to the Bitcoins of the world, and okay, we covered all the lower time frames. Yes, bearish divergent Stokes turning around just about all of them. Retracement back down to 52.85, certainly not out of the question. I mean, again, this is a $40 move, which fair enough. I understand that people like that. I think that 52.20 would be a lot more tradable, and if it was so generous to give us another trade on the 12-hour 21 exponential, that would be absolutely beautiful, which is actually 5,200. And keep this in mind. My rule is that we do have it's like my rule. Jesus Christ. Sorry, I don't mean to sound like a fucking stickler or anything like that. It's not my intention. What I'm trying to get out over here though is that we do have a 12-hour dildo golden cross on Bitcoin, which is quite powerful. The last time that we had one was actually all the way in September of 2016, right over here it was, which took Bitcoin all the way from about $600 to $20,000, which means means that I respect it. And we got one right over here. Again, the green and the purple moving averages crossing each other is what I'm referring to. Now, more importantly, what I really want to get at right now is that my rule is when I see a golden cross, I am bullish on that time frame as long as you are above the 21 exponential moving average, which we are well above it right now. That's a yellow moving average right over here. So if we did come back down and tap it, I think that would be a lot more of a play that I'd be a lot more interested in taking, as just a lot easier to manage around. Right now, I don't have really any positions open except for the one that I just showed you right over here. Again, full disclosure, I think it is important to actually verify yourself on this screen. Do have some resting orders lower, which I might, if I can catch those intraday, that would be amazing. But for right now, just kind of sitting back. Of course, this would all be invalidated if we do. Well, it doesn't necessarily get invalidated if we break 5,200, but I would be taking positions off if we break 5,200. I'd be covering down around there if I can get filled, in that range as well. So for now, just kind of writing that position. A lot of people have been asking me about that, but understand my disposition. I got long at 39.30 down around here, so it's a different game as I manage this position, as I have a little bit more of a long-term view. For people trading the shorter term time frames, I mean, this is that can be the right thing to do. I think that'll be an incredibly unnecessary risk to be taken on. There'd be much more optimal ways of trading that. Anyways, okay, cool. So while we are here on the 12-hour Stokes getting way up there, 10-hour Stokes actually crossing down, 8-hour Stokes looking weak but still up technically, 6-hour Stokes looking weak and kind of want to cross up. So we do see a divergence between all the different time frames. Lower time frames are down, medium time frames are very high and either turning or looking weak, and the higher time frames are pointed up, like the daily, the 2-day, the 3-day are pointed up, but they are looking, they are kind of getting into the more critical zone. So here's the daily, and like I said, we are defending the bullish control zone, which to me is very important. Now we do need to confirm this later tonight at 8 p.m. Eastern time when the daily closes, and also the weekly, which is going to be very important. But assuming that it does close, basically anywhere above, I would imagine 5,300, we will confirm across the upside, and that'll make me a lot more confident in taking a trade for that next leg, actually getting a breakout. Remember that the measured move on this guy is pointing all the way towards, let me just bring it out, towards this next block right over here, which would put us around 57. So yeah, that's kind of how I've been relating it. Also does kind of match up with our volume profile. You can see that there's a little bit of activity in this range. So I would be looking for, a stoppage in price action right around there. Then we'll kind of figure it out as things go. But I will be showing some other things that say, hey, before getting too gung-ho about, I feel like I've been maybe painting a little bit more of a rosy picture than I should be doing. I want to temper those expectations, because that is not the right way to be thinking right now. In fact, right now is a time to be defensive and cautious, not a time to be aggressive and cavalier, at least as far as I trade. And of course, this is not financial advice. I'm not a financial advisor. I'm just kind of sharing exactly, what I'm thinking and what I'm doing in the same sort of situations. So with that said, let's go on to the higher time frame. So yes, this is a daily right over here. Daily Jewel is going to be lining up, but I would not be taking it. More importantly, what I do see on the Daily Jewel is that we got something like this going on, right? We actually had a trend line that we were being walked up above since like February. Yeah, that nice accumulation right over here getting walked up. Well, we broke that not so long ago, and I would be looking for a retest of this trend line, and for resistance to come right in around that trend line, as you see the slower signals on this one start to point right around that area. So I would be cautious in that area. But how much damage can be done on a daily before that's actually tapped? Well, significant amount. I mean, we could tap all the way up here. It also could be that we just break that, although I think it's a little bit less likely. Also with the daily RSI, here's the thing: daily RSI is it can certainly have another pop, but keep in mind, if it does have another pop, it's as long as it does not make it a higher high over this like 89 marker over here, which is quite literally the highest we've seen it since 2017 at almost $20,000 price per Bitcoin, we will be having some bearish divergence, and that just makes it a lot easier to get that bearish divergence, which you'd imagine if we got that next leg up right around here, probably going to be putting that in. So while these timeframes do suggest that we could see that next leg, it is I'm probably going to be a seller. I'm very likely to be a seller up there. Going over here to the 2-day. 2-day Stokes way up here, technically down right now. Technically down. Although we did just get a new tick on this last night actually at 8 p.m. Eastern time. So it is fresh and it is actually confirmed down. Now here's the thing: each and every time that the 2-day Stokes have gotten into this range, it has not been good for the bulls. Calling it the 20,000 top right over here, 12,000 top in February over here, 10,000 top in May over here, and 8,400 top in August right over here. So again, just another thing saying, hey, yes, it does look okay for right now, but be cautious. It's time to be cautious right now. Looking at the 2-day RSI, see that the 2-day RSI is very likely to create some divergence unless we bust up and make some and do something pretty fucking impressive. It's always possible, but I'd say that statistically speaking, probabilistically speaking, it's unlikely. So while I am going to be presenting some more bullish things here, I do want to say that, hey, just because that might be the case doesn't mean that we're just going to go like this, like I think a lot of people think, and then boom, it's just straight up to fucking 10,000. I don't know about that. I think my personal opinion is that we probably do get the bullish break here, do tap this area, and then come back down, retrace somewhere down into the mid, maybe low 4,000s, and then we'll figure it out. And then that's going to be the real test of is the low in or not, which we're going to be talking about extensively today. So with that said, I'm going to be looking at our exponentials right over here. We actually did not take out the 200 exponential, this purple moving average right over here yesterday, so that does make me a little bit more confident that yes, we did not see, very obviously we would not see the real breakout yesterday. Look at the volume signature on this as well. This is not breakout volume. I think this is very visually apparent on the lower time frames, as we spoke about before. What I want to see is this trend line being broken by a massive girthy volume dildo, which we just do not have. So again, it is getting closer and closer, but I think I was a little bit too gung-ho yesterday. Let's see. Going over here to the 3-day also stifled by the 200 exponential moving average so far, but we have not closed that just yet. It is closing later tonight at 8 p.m. Eastern time along with the weekly. It does look okay. 3-day Stokes are high. They are up. They are high, just like 420. But here's the thing. It's each and every time that they've gotten in this range, it has not spelled too many good things for the bulls. So just another thing saying, hey, if we do move higher, be aware of that area. Oh, I did forget to mention on the 2-day total time frame that the 200 simple is right around 58.50. So anywhere between 57 and about 58.50ish area is kind of where I'd have my cannons aimed towards. What about the 3-day RSI? Do we have anything to say about this? Again, going to be pretty easy to make some bearish divergence on this. We've been away from this exponential for a very long time, which we typically don't spend all that much time away from. It's quite rare. The last time that we were this far away from it was on the drop from 6,000 to 3,000. Kind of doing the same thing right now, right? Let's go over here to the weekly now. Weekly, very important because we're going to be closing it later tonight at 8 p.m. Eastern time. And here's the thing: if we do close the weekly here or higher, if we just close the weekly above the 50 exponential at about 52.50, these moving averages will converge on each other, and that would suggest that this is actually this is going to break to the upside. So again, I would be keeping an eye on these. Do we see these moving averages converge or diverge? If they diverge, very likely the next big move is down towards 4,500. If they converge, very likely the next move is up to 57-ish area, and potential to go higher. And just like we'd have potential to go lower, but I'd be very confident in those targets. So about a 10% move either which way, which is very tradable, absolutely. Looking at the weekly Stokes, they are getting very high, but they're not crossed down or anything like that. It's okay. But again, in the same area that we haven't seen since December 2017, right? Weekly RSI. Getting the thick of the neutral zone. A lot of the time you will see some resistance in this zone. We are very far away from the exponential. We have not tested it in a very long time. This very rarely happens. The last time that we were this far away was on the drop from 20,000 down to 6,000. So keep that in mind. Again, going off of statistics and probabilities, it's more likely to be a little bit more mean reverting than not. And I do believe that I forgot to mention the 3-day Jewel. Yeah, 3-day Jewel. So I will be keeping you updated on this, but 3-day Jewel. Actually, let's leave this for the more longer-term discussion. No, we can actually talk about it right now. So this is a big reason of why I'm very cautious right now. Is because the 3-day Jewel is actually getting into the more critical zone, which has called actually all the major tops and all the major bottoms in Bitcoin's history perfectly, even better than the MVT signal. It is, and I like this better because I've actually I actually made this. Well, I didn't make it myself. Like I didn't program it, but I had to say in fucking making it. So I feel like I understand it a lot better than something like the MBT signal, which I can understand tangentially, but I didn't directly do it. So it's not like, it's not mine, right? This one quite literally is mine. And when it comes down to it, this thing has been perfect, and we are signaling red right now. Now, here's the thing: just like the MBT signal, it can signal red for quite some time before an actual move plays out. But as you do see, it has been perfect. The last time, signaling green red over here on our current low, signaling red on the 20,000 high, signaling red on this high right over here, signaling red on this. Let's actually measure them out too. This high signaled for that move down was about 71%. This move over here signaled right here, 35%. This move over here, whoops, I didn't get it all. Let's zoom in a little bit. Right over here, down 33%. This move over here, down 35%. This move over this one was not a good one, actually. Well, good is a relative term, right? It's certainly not in line with the other ones, but we did actually call a little bit of a toppy top right here. A little bit of a down move. It did have some follow through, but probably not all that much. I mean, really, you want to be catching this right there. Yeah, it's like 10% at most. This one right over here, the time before that, nice little 40% down. Time before that was right over here, catching this massive wick to the upside. And we played out, a 40% down move after that. Caught the low right over here on the last market cycle. Caught the high of the prior market cycle as well. Actually, right over here. Come on, baby. There we go. What was this one? About 67%. Caught the high of this guy right over here as well. Down. Jesus Christ. This one really did have a nasty wick down 82%. If you want to be a little bit more lenient, you could say 75. And then obviously this guy right over here, which was, it doesn't look like much, but it actually was another 57.5% down as well. So, to put that into perspective, I don't believe that we're going to play it out just yet. This is still very, young, and we're about to get another tick on it, and it's not going to populate it all that much, but you can see that if we were to play out even, I would say like the median of those was around 35%. If we were to play out a 35% down move from here, which I don't think that it plays it out from here, I think that we get probably another leg, that would actually put us at our prior lows right around 3,400, which would look a lot like, and I fucking hate that I'm saying this, a lot like 2014 2015, where Bitcoin returned around the lows. It did not get down to the spike low, just like I don't think that we, it's not going to violate the 3,100 low right over here, but it does get down around to this kind of support, which would be in confluence with the weekly 200 simple moving average, which is what I've been saying for a very long time. It's not appropriate to be as a trader. It's not appropriate to be as a trader. It's not appropriate to be a fucking trader. No, it's not appropriate to be as a trader bearish, looking and having that trade angled for the downside until that area is broken. In my experience, in the way that I do things. Of course, anyone could do whatever the fuck they want. I'm just sharing what's worked for me. The way that I found on the 3-day dual to actually kind of judge these is not so much when it just flashes red, but I want to see it flash red, and I want to see this light blue oscillator also get back down below this critical marker right here and have a slope to the downside, which we do not have right now. We still have a slope to the upside. So the next tick tonight is going to be very, 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 very insightful. Does it tick up? Does it tick down? If it ticks up, very likely we get that next move towards 57, 58. If it ticks down, very likely that, well, gravity takes over sooner rather than later. Okay, cool. So we spoke about the weekly as well. Let's go check out the monthly. Of course, the monthly having the yellow 20-minute exponential moving average right over here. This is kind of my judge for being generally bullish or generally bearish. Bitcoin's above it, I am generally bullish. If Bitcoin's below it, I'm generally bearish. This was something that I use in traditional markets where I come from, and to kind of, I know there's a lot of new people here. My sort of unique personal background is that I was a market maker, authorized trader on the floor of New York Stock Exchange ARCA, and I'm a market maker in options to be exact. And I would use the monthly 20-minute exponential to judge if a stock was generally bullish or generally bearish, because they have decades of history. Bitcoin has about a decade of history now, so it is appropriate to be using it on, and it has been, and more importantly, it actually respects it over time. You can see that when Bitcoin lost the yellow 20-minute exponential moving average right over here, that was when it got sent on and wrangled to its ultimate red dildo capitulation death hole. And when it actually regained it right over here, just by ever so slightly on good volume, well, timing your beautiful bullish momentum from $300 all the way to almost $20,000. So again, does hold a lot of weight. Now we do have a bearish cross on this as well, and we will be getting a new tick on this in less than 10 days now, as it is the 21st of April, right? And to me, the next big thing for this is, do we see this area get rejected or not? Now, I'd say on first pass, it's more likely to get rejected or not. And this is the first time that we've tested this after 6 months of being away. The last time that we lost it, we tested it once, twice, 3 times, 4 times before actually taking it onwards and outwards to the upside. So keep that in mind. I'd say that it's not a death sentence, but it is, it's more likely to reject on the first pass than it is not. Statistically speaking, once again. Also looking at this, monthly Stokes. We do see monthly Stokes hinting at across the upside. That would be considered good, right? Right? Well, we have an example right over here in 2014, 2015, where they crossed up in the more critical zone. But where did that happen? And sorry, let's just, this was in June 2015. I'm going to highlight this right here. June, keyword June. Well, June was right here where Bitcoin came up, tested the 21 exponential, look at this, and rejected from it back down to its lows, actually. Kind of similar to what we're looking at on the 3-day Joule. And while, ultimately it did turn around, that was still what? Was this a 35% drop? It was 33.5% drop. That's kind of strange. So again, a lot of confluences between these things. So, I want to remove myself from the discussion. Is the lows in or not? I can argue both sides. I'd say that the fundamentals suggest that the lows are in. The technicals suggest that it is less likely that the lows are in. But as a trader, it shouldn't matter. Have to be able to make money in all sorts of dynamic environments, because even if the low is in, you got to be able to deal with something like that. 35% drop is no fucking joke. At least in my opinion. I understand there's different perspectives. People might disagree. Fair enough. But hey, just sharing my perspective. So there you go. Let me just I'm losing my voice now. Sound like a fucking raspy lesbian. Jesus. Okay, cool. All right. So. Yeah, you also do see monthly RSI probably wants to tap the exponential. The last time that we were this far away from it was, well, basically on the run up. It actually does kind of stay away from it from a long time. So yeah, fair enough. Just another kind of thing saying, hey, a little bit of caution here would go a long way. Okay, cool. What else do we want to look at? We looked at all of that. Okay. Let's talk. Okay, so yeah, while we're on here on the monthly, what I will say is that if the monthly does not reject it on the close, and we actually do end above 52.50 as it currently stands, I would be looking for a move actually much higher, probably into the 6,000s. And you know what? I can actually come up with a potential target for this. And to do this requires the insightful help of the good old matrix on BLX index. So I'm going to put on the drawing tools. We're going to go through this one by one, and each and every one of these dotted trend lines represents a support trend line for a parabolic market cycle, each and every one of Bitcoin's history, starting out with this area right over here in 2010, anchored in 2010 and 2011. It was broken in the 2012 era right over here on this down, and that became the highs of our next market cycle in 2013 and 2014 right over here. Then we created another support trend line for the next parabolic market cycle anchored in 2011 and 2012, which was broken all the way over here in 2015, and that became the highs of our next parabolic market cycle in 2017, 2018. But you can see that we never get back above it, and actually we do test it pretty recently after putting it in the low and do reject from it. Then we put in another support trend line for this past parabolic market cycle right over here in 2015, anchored in 2015 and 2016. That gets broken in 2018 on the drop down below 4,000, which also broke the purple 200 exponential moving average on the weekly. Very fucking important. And does that become our governing factor going forwards here? Well, where would it be coming in if we approach it very rapidly, as this does rise, significantly over time? It would be coming in actually around 6,900, which is a great number, and rising, rapidly over time. So, if we were just to extend this out, a few years, right, to 2023, it could potentially be, a potential high could be 240,000. Now, am I saying that Bitcoin's going to go to 240,000 by 2023? Fuck no, I'm not. I don't think that's likely to happen. I think that Bitcoin has potential to get to some crazier levels, no doubt about that. I am a long-term Bitcoin bull. I am a long-term Bitcoin believer. But I just want to suggest that if we were to approach this area, that would likely be calling a top. That's what I'm saying. I'm not saying that it's going to get there at that time. We can do this all the way out, but keep in mind that when we do test this trend line, that typically is where the highs are put in. So what you really want is you want slow and sustained growth, because that allows this to actually meet it at a later date, which, as you can see, if you just extend it another year, just another year all the way to 2025, if we can even get over there. Yeah, it's right over here, potential high of 1.5 million. Now, again, I think that we probably put in a high before that and create another, another series of this. But just as an example for argument's sake, did want to get that out. So Okay, great. Of course, while we are here on the weekly, I always do want to say this. Hey, if Bitcoin does, if Bitcoin does play out that down move, sorry, we actually didn't measure it perfectly from the 3-day. Remember, the kind of median for that move on the 3-day jewel was about a 35% down. If we kind of make a if we were to make an assumption that Bitcoin ticks all the way up and tags this area right around 57, 58, and then plays out like a 35% down move, where would that put us? At around 3,700. So again, it's in that range between 35 and 37. Historically speaking, there are a few outliers, and of course, it's always going to be going off statistics. And let me just make sure that I'm recording. Got the mic on. Okay, thank fucking God, man. 'Cause I'm really deep into this one right now. I really don't want to do that one over again. But yeah, overall, I would be cautious here. Whether we put in a top here, whether we put in a top here. I mean, and maybe it is that the monthly actually does close above, and we do work our way all the way up to 7,000, and then the tides change. But just understand how this next week of price action is so fucking critical to kind of decide and get insight into whether into where we're likely to land this. As even if you are bullish, believing that the lows are in, understand that these phases of the market cycles can take a very long time, a very fucking long time, and it can be very devious and dubious. And the purpose is to frustrate people and shake them out, thinking that it's bullish at a time to be bearish and bearish at a time to be bullish, right? So right now, when everyone's kind of getting super gung-ho bullish, it does make me a little bit apprehensive as well. Anyways, so while we are here on the weekly, major weekly support is going to be right around 4,500 if we were to break down, and obviously 4150 right over here, the purple 200 exponential. The purple 200 exponential is something that held us back for the past 5 months, right? The past 5 months right over here, which to me, that was a very strong resistance, so it's likely to be a very strong support if we were to come back down. So it's kind of like the gatekeeper for me becoming a little bit more angled to the bearish side once again, and like thinking about having a bearish trade. If we break this white moving average right here, that's a 200 simple. If that happens, I take the trade, and I'm looking much further down. That's where I start to join, the perma bears at the very least at 2,500, and likely below 2,000 at that point. So again, understand how important this is right now. Do I think that this looks like your traditional low on a market cycle? Nope, not really. But hey, if this thing were to turn around, I'd be probably the most happy one here. Hey, moon boobs at $20,000, and I fucking love titties. So you best bet your face that I would love for Bitcoin to go to $20,000 today, tomorrow, right now, this instant, because I'll be buying Elsa some massive double G or whatever the biggest sized level of tits are. We've already found the doctor in Estonia, and really excited about that. But Bitcoin needs to do its work first. So moon boobs perhaps on the way, but still got to call a spade. And overall, on the monthly, make no mistake, this is still a downtrend, lower highs and lower lows. So that is very important. Now, with that said, let's put on the Trollinger bands, as I do want to monitor this. And it is very likely that we do close this weekly's Trollinger bands above the top Trollinger band, which is around 51, which would suggest some more continuation as well. So this is also a little bit why I'm kind of leaning towards short-term, medium-term bullish, longer-term still would be cautionary, very cautionary. I'd put it that way. Before I get myself into trouble. But more importantly, if we do close this weekly above 51, yes, very likely that we do get some more continuation. Bitcoin will close above the, outside of the Trollinger bands when it's trending pretty strong. And as you can see, we've come back and tested it once, tested it twice. This is a good setup. And unless the Bitcoin closes below 51, 5,100 by end of day, if it does that, then we're likely coming all the way back down to 42, low 4,000s. But right now, looking fine to me, and looking like it probably does beget some more continuations. So yeah, all right, get that off. Get these damn Trollinger bands out of my face. Get my beautiful exponentials back on, my little babies, and let's go check out. Now let's go into the fundamentals of this, and this is what I really want to get out during this video, because the fundamentals, if I was just looking at the fundamentals, I would say the bottom for Bitcoin is in, and I would say that with conviction too. Now, what is more important when deciding bottoms or major market cycle tops and major market cycle bottoms, fundamentals or technicals? Actually, fundamentals. Fundamentals are more important. Why? Because that is for the longer term look. Technicals are more important for trading, for more short term stuff. Yes, they are important for judging major market cycle tops and bottoms. It would make this a lot easier, which I'd say is still in the air for technicals. But when it comes to priority, fundamentals get the nod in that sense. So it is interesting to me that we are actually seeing some very significant things, because Willy Woo has gone ahead and updated a lot of the things on his website, which have given insight as, you know, a lot of the feeds that he had before. I think they might have been bad feeds, probably from CoinMarketCap, because they're just god awful. No one should use them for anything, and basically a lot of these have been updated, which do suggest would suggest that the lows are in. So let's start off with this one. Bitcoin price models. This is just a conglomeration of a shit ton of these different metrics. You know, a bunch of different moving averages on the MVT, CVDD, realized market cap, a bunch of different metrics on the market cap. You don't need to know about all of them. You just need to know the trend, which is when they converge on each other. That is when major lows are being put in. You see one right over here. You see one right over here. You see one right over here. And what are we doing right now? We are actually converging. They are converging on each other. Not only that, but if we do, oh man, I just want to, I want to show just one of these right now. It's the delta cap, which is this kind of like light brown color. This light brown color right over here. I'm highlighting it right now, so just take my word from it. But basically, if you follow it all the way down, it actually has, whenever Bitcoin's touched it, that actually does call the lows perfectly, pretty much. Did get it right over here, although Bitcoin did kind of break it for a second. But overall, you know, when it's around there, it's time to be thinking major lows. It's not time to be thinking major bear. Over here in 2014, didn't quite get there in 2013, and in 2019 we actually have touched down on it right over here. So again, just another thing that would be suggesting, hey, fundamentals are kind of suggesting that. Or would be suggesting that. Let's go over and check out the MVT signal, which a lot of people sent me this yesterday night because there was some massive debate on ToneBay's channel. Shout out to ToneBay's, good meeting earlier this week, and there was someone brought up the MVT indicator that I was using on TradingView, and Willy Woo said that it's unverified. Well, I mean, it might be unverified, but we can just, you know, we can look at it together and we can see that they are just about the same. I'll bring it up right here. And you can make the judgment for yourself. Again, I'm just going to present the information, and you're 100% capable of making your own decisions for yourself. But I think that you can kind of imply where I'm already coming from. But basically, you know, it's red when it should be red. Going over here, red when it should be red. This area, this area, this area, this area, this area. There's this area, and more importantly, when we put in the bottoms, I want to see it come down to a 50 marker. Did we come down to a 50 marker on the drop down to 3,000? We did not, which this thing calls bottoms when you come down around the 50 marker on the oscillator or lower. And if you're not familiar with the MVT signal, it is the network value divided by the daily transaction value. And you can see that it's called all the highs and all the lows in Bitcoin's history perfectly. Almost as good as the Joule. Just as good as the Joule, to be fair. I'm just playing around. But yeah. Called this low right over here. This one was obviously a lot lower. Called this low right over here, significantly lower. This low right over here. This is more around the 50 marker. The turnaround over here, right around the 50 marker as well. The 50 marker right as well over here on the drop down to 6,000 from 20,000, which was an example of capitulation. But as you can see, we have not really gotten down there just yet. And more importantly, we are having essentially the same action. So I'm going to zoom in. Pan it out, and here we go. We can actually look at this. And again, I'm just going to zoom in on this more recent price action. Again, just make your own decisions. You know, does this look similar to what we're looking at on this chart right over here? Well, MVT on this one actually just ticked up, but perhaps it is not updated just yet. On daily right over here, it is ticking down, but overall the shape of it is the same. And more importantly, for the MVT signal, what I'm concerned with is I'm looking at when this orange moving average is going to be broken. And actually, I've found that the 13 moving average is not the best way to be using it. It's the 18, actually. It's the 18. Which, when we break the orange moving average and we actually confirm below, which we did not over here, we just had a little bit of a stab. We did not like open and close a full-on oscillator below it. That is when the rest of what I'm about to say becomes available, and this is pretty much in confluence with the 3-day Joule as we showed. But basically, as we can see, back testing it, just picking a random point right over here, Bitcoin is getting into the red zone. Okay, that is gatekeeper number one. Needs to happen before the next thing that I'm going to speak of. The next gatekeeper is when the MVT signal crosses the orange moving average right here. That is what makes the rest of what I'm about to say possible. So those two things need to be set in stone. Otherwise, we're not talking about major highs it's not about major lows, but major highs being put in, which does not suggest new lows need to be put in. It just means major highs. Just like the 3-day jewel does not say that major new lows need to put in. They could happen, but it would be suggesting a major high, perhaps around 30% drop. And you can see right over here, when we actually cross the moving average, that is what begets the bearish momentum. That happens right here at a price point of about $19,220. It doesn't get the ultimate high, but it gets good enough for me. Now, after that, I want to see all of the rest of the things I'm about to speak about in place, but they don't have any particular order. And I want to see the Stokes crossing down and getting below the critical zone right over here with my settings. Then I want to see the daily RSI breaking the exponential right over here. It does not need to have bearish divergence, although on this example it does, and then getting below the critical zone right over here. And then I want to see the daily jewel get into the critical zone and tick and have a downward slope. All these things very important. And then if you want to do one more example, we can do one more. We can do one. Let's do this one right over here. Again, not going to be perfect. Not going to time you the ultimate top on this one, but it is better to be safe than sorry. And what's up, Anaru Hamu? Good to meet you, man. Always a pleasure to meet new people in this beautiful cave. We do see that Bitcoin getting to the red zone. Okay, so tick 1. But remember, just because it gets red does not mean short immediately. We need to see this moving average taken out, which happens right over here at around, after we kind of broke the 200 exponential, to be fair, which was kind of my signal for taking a trade, as I wasn't really paying attention to this at that point in time. Okay, so that's what makes the rest of this possible. Then we see the daily Stokes crossing down right here. That happens on this day, actually being a more preliminary indicator. So if I have to make a relation between the two, it's the Stokes, and it's actually the jewel that calls it first. The jewel calls the actual high right over here by just getting into the more critical zone and then turning around its slope right over here, which happens on the 25th of June right here. Then the Stokes after that are going to be the next one. They happen right over here. Then the daily RSI breaks the exponential right over here and back below the bullish control zone, which happens the last. But all of those help confirm and roll this onwards and forwards. Anyways, are we doing that right here right now? Have we broken the moving average on it? No, we have not. So again, it is a time to be a little bit more lenient with what we're looking at. And it's certainly on my radar. It's very much on my radar, but it has not happened just yet. Just like the daily jewel has not gotten that down slope, or sorry, not the 3-day jewel has not gotten the downward slope. This one has not broken the moving average, which makes the rest of what I'm looking for possible. So it is on the radar, but not quite there just yet. Okay, great. Got all that out. What else do I want to talk about? Okay, now let's go back into the fundamentals. So we spoke about the MVT signal. We spoke about the price models. Let's speak now about the Bitcoin network momentum, and then we have two other very big things that I haven't spoken about before, which we'll start with the Bitcoin network momentum, which this is very interesting to me because I think that there's been a lot of, and this is going to sound very arrogant from my side, but just please hear me out. I think that there's been a lot of misinterpretation of this by the people who actually fucking made it. I think that they're missing something, which is basically what's going on. Like they're looking at this for momentum, which yes, it does get the momentum right, but that's a very crude way of judging it because it's going to lie to you. I mean, where do you judge your momentum being gained? Technically, since this area right over here in 2014, 2015, you were gaining momentum, but Bitcoin was still going down, another 50, more than 50%, right? It's my point is it's not good enough to make trades off of, or to even judge major direction as, 50% drop. That's not acceptable. That's not fucking, it's not, to put it bluntly, it's not fucking acceptable. What is acceptable though is that I found once you do start making this momentum to the upside, making higher lows, then you put in basically a support trend line for your next bull market cycle. So you're gaining momentum. Now you're in the bull market cycle, and that creates a trend line right here. After that, things kind of top out. This oscillator just basically makes a series of lower highs essentially, but it's not until it actually breaks this same horizontal, this support basically that I put in right over here, where the bearish momentum begins. But we're going to get into some very important just a second. So you can see right over here, it pretty much calls the top, not to the T, but close enough. So after we break that, then it's down, and we start gaining momentum once again. But when is the low being put in for the next market cycle? And this is the important part. When we actually break that support trend line of the past bull market cycle, there you go. That happens right here, right here. And that actually gets the low pretty fucking well. And yes, we are gaining momentum at that time. And then we create another support trend line for this next parabolic market cycle, right? And we break that in 2017, 2018. Now we're going down, down, down. We are, however, gaining momentum right now. We just made a higher low on this. And we made a higher high. But are we above this critical zone right here? No, we're not. And that's what's that's what's concerning, because it's not until we get above this area where the bullish momentum begins. So you can see right over here, happens here. Happens right here, happens right here. Do we have it so far just yet? Have we taken this area? No, we have not. So it's still, it's still up for debate is what I'm saying. It's still up for debate. Okay, let's get on to the next one. This one I think is incredibly interesting, but before we get on to that one, we need to go over something else first. Let's go over to the B chain. So this is going to be the miners revenue chart, or chart of miners revenue, which I'm going to overlay with, no, we're going to, whoops. Oh, motherfucker. What did I just do? What the fuck did I just do? All right, can I get out of that? All right, that's embarrassing. What the fuck was that? What the fuck was that, man? Goddamn computers. Did I just like dox myself or some shit? Can someone please let me know if I just made a huge mistake and I should delete this video by revealing whatever was on that page? Oh well, if you want to steal all my money, go for it. My trading accounts aren't on this computer anyways. So I mean, my streamer accounts are, but yeah, they're my streamer accounts. Don't really care about them. I mean, I do care about them. I'm not like fucking throwing caution in the wind, but you get my point. They're not my priority is what I'm trying to say. Okay, here we go. Let's put on the BLX index right over here. Let's put on log scale. Okay. All right. So this is a chart of the miners' revenue with the dildos in the background. The orange line chart is the BLX index, a chart of Bitcoin's price action. You can see that each and every time that the miners' revenue goes parabolic, it puts in a support trend line around the high, and that calls the lows for the next cycle on the Bitcoin price chart. So there's a relation between these two. Starting off with this first rise right over here, puts in a parabolic run right over here, horizontal being put right on in, and then on your next cycle, where do you bottom out? Well, right here, when you touch down on this area right over here. Then you can see that we put in another parabolic cycle right over here, put in a trend line right over there, run that over, and that becomes the lows of this area right over here. Then we put in another support trend line for this past one, and run it over here. That becomes our next lows for that next parabolic market cycle right over here. Then you can see that for this parabolic market cycle right over here, put another trend line right over there, zoom it on out. Oops, got to do it like this, unfortunately. You can see that, we have touched down right here, and we have basically touched down right over here. So did we put in a low? This would suggest so. That has been the trend. Does that mean that we can't return back to the lows? We can definitely return back to the lows. As you can see before, this thing can grind a few times. So does that mean that, just go all in? Fuck no, man. I mean, again, this is not financial advice. I'm not financial advice. I'm just kind of, sharing. But again, just something to be aware of. Okay, now let's get on to the new information. Oh, you bastard. Get off here, you fucker. You motherfucker. Okay, maybe get rid of that. Oh, this is so annoying. Motherfucker, man. I give up. All right. We'll do it this way. Okay, seriously. There we go. Yes, get the fuck off, little bitch. Okay, there we go. Okay, so this is what I want to show now. And this is something called the POOL, or the pool multiple Bitcoin fundamentals. And this is basically kind of what we just looked at with the miners revenue, but it's the miners revenue divided by a 365-day moving average of the miners revenue, essentially. So a year's worth of moving average, which we're going to show has actually been really fucking good at calling lows as well. So I'm going to put it on this chart right over here, the daily, and let's see, I'm going to bring up, oh man, okay, that's going to destroy it. But basically what I'm trying to show is that when this blue oscillator gets into the green zone, that's what calls lows. Starting off with this one right over here, boom. Then let's go to the next time that it happens, right over here, boom, before you move up. Then, whoops, wrong one. Then right over here in January 2015. Oh, that sounds familiar. Right over here, huh? Then when's the next time we touch down? Well, we don't really touch down it over here. Then the next time we come down to it is when? First week of December. That was right over here. So another thing kind of suggesting that the low is in as well. So again, there are certainly things, coming into the market, the fundamentals would suggest, I would say that the fundamentals are on the side of saying that the lows are in. The technicals, I would not necessarily agree with. There would be a lot more things that I'd look for, of which I've discussed in a lot of past prior videos. But for right now, like I said, I do put more weight on the fundamentals for actually judging something like that. Could it be that, the low is in and then Bitcoin comes back down? Yeah. Could it be that I don't give a fuck where the low is? Yeah, that's actually the case. I don't give a fuck where the low is because this channel is focused towards traders. So this is more mental masturbation than anything. People who need to find the quote unquote ultimate low are usually the people not playing with that much money, and that's why they need to find the ultimate low. No, that's a very arrogant thing to say. Sorry, that's not what I should say. What I should say is, let me just make sure that I'm recording. Okay, great. What I should say is that, as a trader and even as an investor, there's more to it than catching the ultimate low. There is something to consider that is massive, and that's opportunity cost. And opportunity cost is going to be a relation between profits and also time spent in a trade, right? There's an opportunity cost of being stuck in a trade that is going sideways for years. I mean, let's just pull up an example right now. I'm going to pull up gold, a chart of gold. This is a weekly chart. You see that gold might have bottomed. I actually don't think that gold's bottomed probably. But if gold, maybe it has. It might have bottomed. But my point is, even if it bottomed, even if it didn't bottom, which doesn't matter to me. It's been going sideways since fucking 2013. It's been going fucking sideways. So if you are a long-term investor, this is dead money that would be in this asset. It's not until it actually breaks out above, really this 1400-ish level where I'd say this thing's about, something being worth being in again. Now, would I put some, if I was a long-term investor, would it be worth putting some money in this? Yeah, at this price point, but not my full fucking account. No way. No fucking way. We don't know how long this can go on for. We're putting in a massive consolidation right here, which technically as an ape, Jesus Christ, this can take a very long time. A very long time. So keep that in mind. And I kind of have the same opinion on Bitcoin. If the low is in or not, it does not matter to me as a trader. And this channel is, again, focused towards traders. Yes, we do talk about this mental masturbation, but it is less important to me than actually being able to survive on a day-by-day basis, which is really what really what we're focused on here. So again, understand that sort of conversation, people's opinions change all the time. I'm just trying to present exactly what I'm thinking at exactly that moment. And that's essentially my opinion right now. If the low is in or not, doesn't really matter to me. If it were to come back down around here, I probably do actually scale a little bit in just because that has been the trend, and I think that it would be worth it. But remember, I took out about 75% of my actual trading capital when Bitcoin put in this bull trap here at about $16,000 price per Bitcoin, $16,500. And I was playing with 25% of my account. Then I took out another 70. Then I took out like another 75% right over here on the run on this trap to 7,000. I took it out at 7,000. People were laughing at me because it went up another like $300, $400. Well, what happened after that? Again, I'm not trying to talk shit on anyone or anything like that, but again, this game takes a long time is my point. So it's, be careful to judge things too soon. And that's why you kind of see me step back and not be too gung-ho about any which way. It's less important to me as a trader. Short term, yeah, I'd probably be a little more bullish on this range. A little bit more medium term to long term, I would be looking for a major pullback. And like super long term, I'm a believer in Bitcoin, so I suppose that does make me bullish, as we did look at on the Matrix. But overall, that's kind of my point right now. Is the market doesn't happen in one day. It doesn't even happen in 1 week. Doesn't even happen in 1 month. I'd say it's probably best to judge it on like a quarterly basis, of which we can actually do. Which, to be fair, guess where we bounced off of on the quarterly, off the 21. Oscillators aren't going to be telling us shit there. But yeah, I guess this quarter is going to be pretty damn important as well. But here's the thing. We just got this last tick on the quarterly. We have to wait all the way until July until we get another one. So yeah, if by July we're above 5,500, I'd be saying that, the lows are in. And I'd be comfortable with saying that. If by July we are under 5,500, I'd say still up in the air. But of course, there's going to be indications beforehand. Anyways, I think I think I've probably spoken your fucking head off right now. Do we want to even cover up the shitcoins? We can just briefly go through them. Mr. Buterol, actually kind of indecisive here. Looks like he wants to come back down to test 160, 169. Not the best look on him, although daily stokes are up. What about the weekly? Whoops. Okay, that's right. We're looking at BitMexico. Let's go to a real. Let's go to an exchange that lets you trade. Yeah, weekly over here is looking okay. Daily range between 169.5 and 182. I know I'm not saying anything too crazy over here, but again, just play support and resistance. I don't see any benefit in playing the lower time frames. It does look like the next move to me wants to be a test of support down around 170. Again, gonna follow what the rest of the market does. What about Mrs. Litecoin? What's she doing? I do believe that Mrs. Litecoin's probably bottomed. Regardless of whether you think, it's going to zero or not for now, which I'm not like, even if Mrs. Litecoin does go to zero, as some people might think, like it probably doesn't happen for a very long time to begin with, which again, I don't care about, like, I don't care either which way. I don't even trade Mrs. Litecoin. It's completely indifferent, but, as far as charting patterns go, if you show me the tentacles of Mrs. Litecoin, I'd say, oh yeah, bottomed. This looks like a bottom to me. Increasing volume on the way out. Very, very powerful move up. I mean, this is a over 300% move to the upside. Yep, I think it's bottomed. We got a golden cross right over here. Beautiful, absolutely beautiful. Rest on support right now. Do not want to see it let this. If it does let this $80.50 area go, I would be looking for a move back down to 79.30 cents. But I think it's a little bit more likely that it gives another test towards 85.25. And if that breaks, I'd be looking for a move towards 89.90. Do you want to go with the shitcoins really fast? I'm doing this very fast. Wow, Cardano hit our weekly support at 1400. Holy shit! That I legitimately thought that we were actually going to bounce right around. I guess we did for a second, but that got sold into real fast. Yes, we did have this target at 1400, but my God, brutal, fucking brutal. And what do we have in Mr. Cardano? Just another lower high. In an overall series of lower highs. And some hidden bearish divergence along the way. Very bad chart. BNB count. Let's see. Looks like we did make a slightly new high. $25.50. Selling off that right here, right now. I do think that we come back down and test $21 or around $21 most likely. But you see daily stokes start to curl around. Yeah, I do think that this run wants to come back down and test lower. Do we have some bearish divergence over here? Yeah, a little bit. But overall, the weekly is going to be closing strong, I believe, pretty much no matter what. So yeah, I'd be looking for a move probably back down to around 21. Zcash. Ooh, Zcash. I was actually looking for this one to take a leg up yesterday. Nope. Zcash turning down. So we're seeing all the alts kind of turn back down. Maybe I'm wrong to be short-term bullish on Bitcoin. I think I might be wrong on being short-term bullish Bitcoin. If Zcash breaks this $68.50 region, I'd be looking for a full move down here to about 64. Bcash wants to come down to 277. Tron Cash, yep, exactly what we spoke about the other day. This one is coming down, baby, and it's going to be destroying our most important support. This is going to destroy the case for this as a bottoming formation. So the people calling a bottom on this one, nope, not appropriate, and actually quite bearish right now, as we just had a fake out on a golden cross, which probably have a move back down to 2.2 cents, 2.3 cents, down around here. Neocash back down to 10 and a half. All the alts are looking bearish right here. EOS back down to 5.25. Whoops, wrong chart. Ripple Cash, been bearish on this one, still be bearish on this one. Probably coming back down to 31 cents. Yeah, 31 cent support. Monero Cash. Monero Cash actually okay. Monero Cash actually looks okay. I actually think that Monero wants to break it up. I'd be bullish on Monero. Bearish on all the other ones though. What about Stellar Cash? Down. Yeah, coming back down. Next target 11 cents, but ultimately lower than that. I think 10 cents is the next support. Yeah, 10.4 cents. Yeah, all the alts look bearish. So maybe I am wrong on being a little bit short-term bullish on Bitcoin. That's not a good sign. You usually want to see the market move together, and we're not really seeing that right now. So let's go back on to Mr. Bitcoin. We'll cover up the lower time frames just very briefly. Yeah, Bitcoin putting in some bearish divergence, all time frames up to, I believe, a 6 hour. confirmed. So, a little bit of a pullback intraday. Again, I'm not too concerned with what happens intraday. It's where we close the daily and the weekly, which is what's going to matter the most, and the 3-day as well, where that next tick is. I would like to see the daily defend the 377 exponential moving average right over here. If that happens, that'll be interesting. However, there is one contingency to that. Bitfinex did not close above it, although I do put more weight on the US dollar exchanges. Finex did not close above neither. Which one matters more? Finex has been more precise, though, to be fair. So am I wrong to say that? I think Finex has been more precise. Back on a Bitcoin right over here. And I think I'll leave it with that. Lower time frames, looking for a little bit of a pullback. Higher time frames, I would be looking for continuations mediated by today's close at 8 p.m. for the daily, 3-day, and weekly. All the things that we're looking for right over there. If that happens, looking for a move towards 57, maybe 58. And keep in mind that 3-day jewel is going to be my next big signal for looking for a major pullback, most likely. If that does turn around, I'd say that if we do see the 3-day jewel actually turn back down right here right now, I'd be looking for a move back down into the 4,000s, deep into the 4,000s actually. If we see it have another tick up into the more critical zone, then that's where we likely get continuations. Do I want to leave it there? Is that it? I think that's it for me. Been an absolute pleasure speaking with you on this lovely Sunday. Hope you're having a nice, blessed Sunday on this very holy day. Pray to your goat, Jesus, Lord and Savior, or pray to your other Lord and Savior, whichever one that you desire. I'm not going to judge you. I don't care to judge anyone for that. And hey, man, just want to be wishing you well on this nice holiday weekend. So take care. I'll be signing off now, and see you soon.